Good morning, everyone. Today, we're going to explore some fundamental ideas about how economies work, with a special focus on capitalism, finance, and how financial systems operate in real life. These are big ideas, but they're all around us, influencing decisions we make every day, whether we're aware of it or not. Let's start with the basics. What is capitalism? Capitalism is an economic system where private individuals and businesses own the means of production, like factories, land, and resources. The goal of these individuals or businesses is to produce goods and services and sell them for profit. At the core of capitalism is something called supply and demand. The people who produce goods and services, like a company making smartphones, create the supply. The people who want to buy the smartphones, that's the demand. If more people want smartphones than there are phones available, prices will likely rise. On the flip side, if there are too many smartphones and not enough buyers, prices will fall. It's a simple mechanism, but it drives much of our economy. In a fully free market system, sometimes called laissez-faire capitalism, the idea is that competition among businesses will naturally lead to lower prices, better products, and more innovation. But we also know that free markets don't always work perfectly. If a single company controls the entire smartphone market, what we call a monopoly, it could raise prices, reduce supply, or stop innovating, because there's no competition forcing it to improve. Real-life scenario: smartphone industry. Let's apply these concepts to a real-world scenario. Imagine you own a company that produces smartphones. You start small, but through smart investments you grow rapidly. Now you control 70% of the smartphone market. Your main competitor has been struggling, and you see an opportunity to become the sole supplier. In a free market, you think, great, I can now set my prices higher and make more money. But there's a problem. Your customers, ordinary people like us, will eventually realize that they're paying more for the same or even a worse product, and they might stop buying. Worse, if the government sees your company becoming a monopoly, it might step in to regulate you. This is why in many countries, including the United States, the government acts as a regulator in what we call a mixed market system. In a mixed market, like in the US, businesses operate in a competitive environment, but the government intervenes to protect consumers from harmful practices, like monopolies or price gouging. It's a balance between letting the market operate freely and ensuring that no single business has too much power. What is finance? So how does finance fit into all this? Finance is essentially the study of how money is managed. In a capitalist system, businesses need money to grow. Let's go back to our smartphone company. If you want to expand and build a new factory, hire more employees, or develop better products, you're going to need a significant amount of capital. That's where finance comes in. There are three key areas of finance that are crucial for understanding how money flows through an economy: financial institutions and markets, investments, and financial management. Financial institutions and markets. Financial institutions, like banks, play a big role in helping businesses grow by connecting savers and investors with businesses that need money. When you deposit money in a bank, you're not just storing it for safekeeping. The bank is taking your deposit and lending it out to businesses, governments, or other individuals. Let's say your smartphone company needs a loan to develop a new product. You could go to a bank and borrow that money, or you could issue stocks or bonds, basically selling ownership in your company or borrowing money from the public. Financial markets, like the stock market, are places where these transactions take place. They facilitate the flow of money between investors and businesses. Real-life scenario: financial institutions and markets. Imagine a situation where your smartphone company has a groundbreaking idea for a new phone. To make it a reality, you need to raise $10 million. You have a few options. You can either take out a loan from a bank, or you could sell shares of your company to the public through the stock market. Let's say you decide to go public. You issue 1 million shares, each priced at $10. People buy these shares in hopes that your company will succeed, and they can sell their shares later at a higher price. Now you've raised the $10 million you need to create that next great smartphone. But you also have a responsibility to your shareholders to turn a profit and grow the company, because they've invested their money in your business. Investments and financial management. The second area of finance is investments. This is all about how businesses and individuals decide where to put their money to get the best returns. As an investor, you want to make sure that your money is working for you, whether it's through stocks, bonds, or other financial products. The goal is to maximize your return while managing risk. The third area, financial management, focuses on how businesses handle their own finances. This includes decisions about budgeting, spending, and investing within the company. It's the behind-the-scenes work that ensures a company is profitable and sustainable in the long run. Why understanding finance is important for everyone. Even if you don't own a business, finance is important in your everyday life. Think about your personal decisions. Should you spend money now on a vacation or save and invest it for the future? These are financial decisions, and understanding finance helps you make better choices. The financial system also affects things like interest rates on your loans, the return on your investments, and even the value of the currency you use every day. Additional real-life scenarios. Now let's look at a few more real-life examples to help illustrate these ideas further. Grocery stores and shortages. During the COVID-19 pandemic, many of us witnessed empty shelves in grocery stores, especially for items like toilet paper. Why did this happen? It was a classic case of demand exceeding supply. As soon as the pandemic started, people rushed to buy basic supplies, causing a sudden spike in demand. In some places, prices shot up because there wasn't enough supply to meet the demand. In a pure capitalist system, this price increase would be expected. However, in a mixed market system, the U.S. government stepped in to prevent price gouging, protecting consumers from paying excessively high prices. This is a clear example of how capitalism works in real life, with government intervention balancing the system when necessary. Tesla's stock market journey. A great example of financial markets in action is Tesla. When Tesla wanted to expand its production and build new factories, it didn't just rely on bank loans. Instead, it issued stock to raise billions from investors. By selling shares, Tesla raised the money it needed to grow rapidly, without accumulating massive debt. Investors bought into the vision of the company, hoping their shares would increase in value as Tesla succeeded. This is an example of how companies raise capital through financial markets, and how investors play a role in a company's growth. The 2008 financial crisis. One of the biggest lessons in financial risk management comes from the 2008 financial crisis. Before the crisis, many banks and financial institutions made risky investments, particularly in real estate. They issued loans to people who couldn't afford to repay them. When those investments failed, it triggered a financial collapse, causing widespread job loss and home foreclosures. This event showed us just how important it is to carefully manage investment risk and the devastating consequences when financial systems fail. Small business budgeting. Finally, think about a small business, like a local cafe. Every day, the owner has to make financial management decisions. Should they spend more on ingredients, hire additional staff, or invest in marketing to attract more customers? If they overspend on one area, like hiring too many employees, they may not have enough money to invest in upgrading equipment. Financial management is crucial here. It helps the business balance these competing needs to ensure long-term success and sustainability. Conclusion. In conclusion, capitalism, finance, and the financial system are deeply interconnected. They impact every aspect of our lives, from the prices we pay for goods and services to the ways we save and invest money. Whether we're talking about large corporations making decisions on how to grow or individuals trying to plan for their financial future, the principles of capitalism and finance are at the heart of it all. Thank you for your attention, and I hope this discussion has given you a clearer understanding of how these systems work together to shape our world.